let's quickly move on and get the next management on our radar. And we're going to be in conversation with Mr. George Alexander Muthoot, MD of Muthoot Finance. Great to have you with us on the show, sir. Always a pleasure to get perspective from you. So, today specifically, we want to focus on 3 talking points. Number one, of course, given all the changes, the GST cuts, the talk of more stimulus, whether you will be looking at revising your guidance higher at all, FY26. Then we have to, of course, understand how your yields are moving. And then, of course, an outlook on the cost of funds, whether you expect more rate cuts and what that will mean for your margins. So, Mr. Muthoot, let's start with your, broad brush, read through of the GST cut. What will happen is, because for a lot of daily consumption items, the rate has come down from 12% or 18% to 5%. People will have more money in their hands. Now, the question is, what are they going to do with it? Whether they'll buy more, whether they'll go back and repay some outstanding loans. What's your, best case read through of this?
Thank you. And first of all, good morning to all of you. You were asking about the GST. So GST...
Yes, and the implications on your business, sir, yes.
GST number 2 is a big bonanza. It was a big bonanza. And I should call it not GST, but see it as a great savings tax. Not GST, no. Great savings tax is what GST 2 is all about. So it's a bonanza for everybody. But of course, directly, we are not involved. We are not affected or impacted positively or negatively by the GST. But of course, all our customers have been impacted. That's exactly what you said. All our customers have been impacted positively because I'm sure all their disposable incomes will be much better, much higher. They'll be able to spend more and probably save more also. So I think that's a big boost to the spending, etc., which will have an indirect impact on maybe the people who borrow and who are able to repay easily. Yes, that is the good impact we see on the GST front with regard to gold finance.
So, Mr. Muthoot, sir, since there's likely to be more buoyancy, it's also a sentiment booster, right? Generally, when I have more money, the propensity to buy more, maybe, borrow more and then, fund my purchases, maybe more gold loans. So would you look at revisiting your guidance? And you anyway had a flying start in the first quarter. So instead of 15%, do you think 20% growth is going to happen this year?
Surely, definitely last year we had almost a 40% growth. As it stands, in the first quarter we had done well. I think second quarter also we are doing well. So probably after this, during the second quarter results, when we are announcing, we should certainly give a revised guidance, which definitely will be more positive and probably which will reflect on what is happening and what is going to happen in the next year. Certainly, it will be a better performance this quarter also, and we hope, and I'm sure we'll be able to continue what we were doing last year with regard to the guidance. So I don't want to give a number right now. That number I will give during the second quarter results.
Surbhi, Nigel, when we speak with Mr. Muthoot, it's always it's a nice smile, right? And you make us smile as well, sir. It's contagious. So look forward to our conversations. And in August, Mr. Muthoot was with us. He said, 15% is the growth guidance, but would be definitely higher than that.
And now he's saying he'll definitely be better, but he'll tell us a number in second quarter.
But mathematically, it has to be the case, Mr. Muthoot. You're teasing us. You're making us wait till the end of quarter 3. Now you have to revise it. That's a given. The question is how much? What is going to be the new number which we'll be waiting for? I know and the floor is open to you. You can go for it right now. You can give us a broad range and then narrow down on that range at the end of quarter 2. What do you think?
I don't want to do that right now anyway. See, our job is to run the company well. This is a good time for the business. The gold loan sector is doing well. The demand is very much there in all the sectors, wherever it is the outside the rural sector or in the cities also. Demand is definitely great. More people are getting attracted to this. So now priority now is to actually do the business better, grow the AUM, and that is our priority. We will do that. And I think guidance, etc., is just a number which I'm sure we have been doing well. We should be doing well there also. Guidance for the profit, guidance for the AUM, I'm sure it will be positive. As it stands, it's positive. Even the regulations which came are quite positive into this sector. So the gold loan sector definitely should do better. And the demand is also great. Demand is
Yeah,
definitely.
Okay, we won't push you any further. We'll patiently wait for second quarter, but it is looking good and definitely a lot better than what you've said in the past, which was 15%. Since we were talking gold loans, sir, our colleague who tracks the company, Gaurav, pointed out that there were reports indicating, I think Bloomberg did a report yesterday, that the RBI is asking entities to pull back from subsidiaries having an overlapping line of business. For instance, for you, the parent company is into gold loans and there is Muthoot Money, which also gives out gold loans. I don't know, if have you heard anything of this sort? Is there any regulatory change that you're anticipating on gold loans?
No, we haven't heard, but if the regulator insists that we should merge it, we should merge it. That's all. We don't want to go against the regulators. Whenever they come, we have not said anything like that till now. We have not heard anything. If at all they say something, that we will follow it. Simple as that.
Okay.
All right,
Anyway,
Mr.
it's
Muthoot.
100% subsidiary.
Okay, so you don't see nothing big on this front. If it's needed, you'll follow what the regulator has to say. Now, yeah, right. The other point is you have things going for you, right? Gold prices are up. That obviously helps growth. Give us two more numbers if possible. One is on tonnage growth. What kind of tonnage growth can we look at? Because gold prices are moving up, which is obviously helping the business. But on the tonnage side, if you could help us out on that front. And also the cost of funds, that's likely to come down. I think you were guiding for, 30, 40 basis points, a little more than that. So how do we see that flowing through? The cost of funds coming down?
Yeah, I think I should talk about the cost of incremental borrowing. The incremental borrowing from the NCD market, the local NCD market is quite positive. We have been borrowing, we have been getting 3-year funding and 5-year funding at maybe sub 8%. I think that's a good one. Probably that is definitely good for us. 3-year and 5-year NCDs bonds at less than 8% is quite good. That is the incremental cost of borrowing. As far as the bank funding, which constitute about 50 to 55% of our total borrowing, the banks have just recently or just starting to revise or bring down the MCLR. The MCLR has really not come down. So, thankfully, today the bank borrowing cost is still less than 9%, maybe 8.75, etc. I'm sure in the next 1 or 2 quarters, that's also start coming down. The point here is the banks transmitting the lower cost of funding is slow in coming. Probably we should see the bank funding cost also coming down in the next 2 quarters. The third source for us would have been the external commercial borrowing. We did a 600 billion external commercial borrowing last week. The money is in the bank now. So we got, it's fully subscribed. And it is done at 6.45 to 6.35% in the national market. Considering the hedge cost, etc., probably the cost should be around 9% or little less than 9%. Why we did the international funding is that we wanted to diversify our funding source. We did not want to rely too much on the Indian market, etc. So it is just, though it is a little more expensive, today it constitutes about 10% of our total borrowing. So we wanted to diversify. So overall, we see that the cost of funding is coming down. And as usual, that's our practice, the Muthoot Gold Loan Company, Muthoot Finance practice, that whenever the cost of funding comes down or cost comes down, we pass on the benefit to the customers. So we today, the blended rate is maybe 17.5 or 18. If the cost of funding is coming down, we'll pass on that to the customer as and when necessary. We will certainly maintain our spread and our net interest margin. We'll maintain that, and to maintain that, if the cost of funding is coming down, we will pass it on to the customer. That is one of the reasons why more and more customers come to Muthoot. Actually, 80% of our customers are repeat customers.
No, absolutely, and you've always you've always maintained that you will pass on any benefits of lower cost of funds. But can you just reiterate that? I think spreads you said will be around 9.5% this year. Given the rate environment and your cost of funds, diversifying the source of funds as well, what does all of that mean for margins this year? What is the range or, a rough guidance on net interest margins as well?
Yeah, net interest margin has been in the range of about 5.5 to 6. I think we should be able to maintain that between 5 and 6. We may be able to maintain that also.
Okay, Mr. Muthoot, we'll leave it there, sir, and look forward to our next conversation.
Thank you.
Very
You're
much.
all an encouragement for us.
No, absolutely.
I really encourage Muthoot, encourage us to do better and better. That is why we are doing better.
And you do the
Keep
same.
on encouraging us also.
You do the same for us, sir, and we look forward to our next.
Happy belated Onam.
Ona Shamsagal, sir. Happy belated Onam to you too. Thank you very much for joining us in those greetings.